Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Report, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Well, let's take a look at some stocks on the move today in Europe. I'm Stephen Carroll with Lizzie Burden, and we're joined by Bloomberg reporter Chloe Mele. Chloe, good morning.
Good morning.
Let's start then with a jump for Adidas after their latest results.
Yeah, it's a great day for Adidas today. They reported stronger than expected profit, also announced a new buyback, and this really helped to reassure investors after quite a lot of weakness in those shares lately. There was a lot of concerns among investors that currency headwinds and then tariffs would really start to weigh on performance, and that maybe the momentum behind some of the flagship products that Adidas has would start to slow down a little bit. But the strong results that we had this morning and then the buyback were really reassuring, and now analysts are saying that momentum could actually go even further in 2026, given that there's actually, of course, quite a lot of sports this year. You know, things like the Football World Cup will be really great for Adidas. There's really something to capitalize on for them, and the company is also now really trying to diversify some of its growth drivers. For a while it has really relied on how popular its retro sneakers were, so we saw the Samba and the Gazelle everywhere in London, for example, but now it wants to tap a little bit more into running, into football demands, so kind of refocusing on sports over fashion perhaps a little bit. And investors and analysts have said that there are signs that the sneaker boom is slowing down a little bit, so it might be actually a perfect time for Adidas to kind of go back to those sports roots.
Yeah, our Bloomberg opinion columnist Andrea Felstead was telling us that the trainers are dead. Feel like that's going to make people look a bit fuddy-duddy if they're still wearing them in the office. Trainers used to make you look useful. But Chloe, speaking of stocks to watch, Swatch, also on your radar this morning.
Yeah, it seems for Swatch that 2026 will be a very different year to 2025. So if we look at the results for 2025, the profit fell more than 50% and missed expectations by quite a large margin. And that was because of a lot of weakness in China. And then, of course, tariffs from the US, which meant that the US market was also a lot weaker. But then Swatch said this morning that it actually expects really substantial growth for 2026. And it said that it had seen a rebound in demand over the second half of the year, that it had a particularly good fourth quarter, and so that bodes really well for this year. And it's obviously been an interesting few months, an interesting year for the watchmaking industry. We had, of course, Trump imposing 39% tariffs on Switzerland and then walking those back. And it seems that the reduction of tariffs actually meant that Swiss watch exports returned to growth in December because brands were rushing to send inventory to the US after the tariffs were eased. And so it seems that now that watchmaking industry is kind of turning a corner. We had Richemont earlier in this earnings season, which is also another big Swiss watchmaker, reporting a pretty good quarter, pretty upbeat outlook. So definitely good news for that sector.
Okay, I'm going to do my best impression of a comedy radio show host now and ask, who's not in the mood for lighter news this morning?
It's like the Irish Alan Partridge.
Yeah, I chose this stock just because of the pun potential. So Signify is a lamp maker, and not very bright results for Signify this morning. Just issued a profit warning. It decided not to provide revenue guidance at this point. It started a cost reduction program that will impact about 900 jobs. Said they will be pausing share buybacks for the foreseeable, and it also said that those difficult conditions would continue throughout the year. So according to analysts, there's a few reasons why this company is currently in the situation that it's finding itself in, and that is because there's lower demand. You know, it's exposed to the construction market, so if there are fewer things being built, there's less need for lights being installed. There's tariffs as well weighing on the company, and there's pricing pressure. And so Morgan Stanley analysts said that the results were a material negative for a stock that investors were already quite cautious on. And so we saw the shares really tumbling this morning, and it's probably going to be quite hard for Signify to come back from that.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.